Gold gave a bearish candle last week. We had discussed this in our previous analysis. In the last week's analysis, 1984-85 levels was the buy entry. Precisely, it has reversed from the same levels, and below 1950 the target was 1935 levels. It went till 1936. I hope you all profited there, and see the power of analysis is also proven once again. This is the preciseness of the technical analysis. Now, what will happen next week? Which position you should take trading gold in order to profit? Next week, we will see with the help of first charts, followed with indicators, and towards the end, I will give you the trading levels and strategy for next week. Do watch till the end, and do not forget to like, share, subscribe, and comment. Do not forget to press the bell icon, which keeps you updated with the twice a day analysis and targets which I share for gold. First with the Asia session, next with the US session. Also, you can remain updated by joining our free Telegram channel. The link is mentioned in the channel and video description. Let's start. Now, first point is the triple bottom. This is long-term analysis here. See, you can see triple bottom, and since then gold has rallied and it has achieved all-time high levels. If you connect the bottom, now see on the weekly charts, this is the channel in which gold is trading since last multiple weeks. In fact, since October 2022. Now the bottom of this channel is again for next week is at 1935 levels, 1940 levels. If you see gold trading below 1930, because see I am just trying to keep a cushion, what it can do, it can try to give a false breakout and then reverse, and hence though 1935 is a very strong level, I will keep 1930 as a breakout confirmation, and if it trades below 1930, certainly you can expect a bigger red candle can be expected there, where the prices may go, or where the prices you can see well below 1900 levels. Now, one point of to note here that the complete movement has diminished here, which means the prices are not willing to stay lower. Second is the body size has increased. Now, the body size increase here means it traded fairly well with the, you can say, fairly downside, or you can say bottom pull, and that is why the body size has increased. But look at the complete movement is lesser than the previous candle, which is also indicative that prices are not willing to stay lower. Certainly 1935 1930 levels may provide it a very good support. Till 1930 we should not treat it as for a breakout. Also, one more observation here is, see the highs here and highs here are little lower. It also indicated that it is trying to create a further lower channel for its own, and the price is, the degree here is changed. See the bullishness here and the bullishness here is different. It is also indicative that possibly it may try to breach the channel on the downside. Now, next point here is, look at this candle. This candle is a fairly big candle. The liquidity gap could be there, and there could be multiple orders which have been placed there, which it would like to close. Also, there is a gap there at 1870. The next is the support there at 1800. I don't see it breaking 1800. Possibility is less, but yes, if it stays below 1870, anything is possible. Hence, first of all, next week we have observed, we have to wait and watch how it behaves at 1930 1935 levels. If and only if it stays below 1930, we will see a pullback for 1915 1900, and then 1870 is also possible. Increasing body size, increasing bearishness, it can show you a pull. But remember, 3 red candles done, and hence indicators must be oversold. So let's have a look at the daily charts. On the daily charts, same channel remains intact what we saw on the weekly charts. The highs here are lower and are almost parallel, and the bottom here is also intact. Now look at the movement of gold here. See couple of bullish candles, then a lower breakdown. Now the price has breached the previous support levels here and here, but still see after these bullish candles it is retraced here. Now a reversal confirmation is only and only if gold trades above 1985 levels. You can confirm that it is trying to reverse, and then I will wait for it to break past 2000 and 2020 levels. What it could do, couple of bullish candles, then the retracement, then couple of bullish candles, lower highs, and then the retracement, and hence Possibly next couple of days we might see little bullishness before it tries to close the now how far it can retrace. The resistance here at 1985 is very strong. It has created a wall, couple of red candles, support there at 4035 is strong, one green candle here. Look at the highs of the candle. You can find out one observation here is, first of all, it tried to consolidate at 1954.55, and now this is the resistance zone here. And also if you look at the last candle, lower highs, lower lows, it is trying to create another channel on its own. Hence for a couple of days you can expect 1930 levels is something one should wait for it to break out. Now what could happen? See, the next candle can start here in green, either give lower highs, or in fact if it breaks out, 1960 is what you should look out for. Beyond 1960, this is the first green candle. Second green candle may retrace and take it till towards 1970, or in fact 1980 levels are also possible. So this is trying to create this channel. Highs are at around 1970-80 levels, which is going to be a fairly stronger resistance zone. In fact, the more time it takes, the lesser the highs are. So 1970-80 zone is something you should watch out for definitely. Possibly achieving that, again we may see it breaking down. So this is what we can see on the daily charts. Also, if you look at the formation here, see below this zone you can find out first of all the supports here. You can find out previous few candles getting support here, here. Almost symmetrical formation with higher highs have been seen, because below these zone there is a long gap which is to be covered here. Hence we have to be careful and watchful there. Now let's have a look at the monthly candle. Now see, the monthly candle here is the one with the higher highs. Also on the monthly candle, some say the triple top is done and it is bound to retrace. At the same time, for me, the prices have achieved higher levels. It went till 2085 in my broker. Now see, higher high is done here, very well aligned, and now it has looked forward to a drop here. So for next 2 to 3 days, I will still expect a little pullback in prices and which might bring it, as we discussed, till towards 1970-80 levels. It can try to bring the prices somewhere here, either close the candle in green or either close the candle somewhere here at around with a slightly reddish. And the monthly closing could be at around 1970-80 levels, that is 31st of May. Remember, US and UK markets are on holiday for the Monday, and then only 2 trading sessions will be left. So be careful. Yes, there could be a possibility of a little pullback for next 2 to 3 days before it looks over to any downward. At the same time, staying below 1930 is certainly more bearishness. Now let's have a look at indicators. Now indicators on the monthly chart, see, whenever the price diverges from the 20 months average, it always comes back to these levels. In fact, it can try to come back till towards the 50 period. See, this are the divergence here. It has come back to this zone, it has got the support and then seen a high. Now this time it has dropped below, then highs. Now 20 months average, first thing is the monthly chart. So next candle should bring the prices little higher at around 1840, 1850 levels. Second is, yes, this could try to retrace till towards those levels. There is a strong possibility for it. This is the first red candle. A possible second red candle can also be expected. Then next month, and next month is going to start this week itself. Stock ISIC on the monthly charts is also overbought. At the same time, the MACD, see, this is one point which is giving a good bullish indication. It has crossed over here. This is just 2 candles away. This candle may try to close possibly at a doji or somewhere close to doji levels. Possibly a little conversion next month, and then it will again start to fly. So I will not be bearish. I will not remain bearish in gold till it respects at least 1800 levels. Remember this fact. RSI very near to the top and trading almost flat. Now look at the weekly chart. See, same thing we discussed, that the divergence from the 20 period moving average was extremely high and the prices converged till here, and precisely the 20 weeks average has given it a very good support. Now also remember, the moving averages here are trading with extreme divergence, which calls for a little convergence, which means couple or more bearish candles can be expected, which means it can try to pull the prices little down. See 1870, the 50 period moving average, till here it can try to drop in the next few weeks possibly, and in fact it can try to breach below and sustain there before it looking forward to any upward move, and hence one has to remain watchful here. See, moving average must start to converge for next few weeks before it starts to diverge again. Now stochastic has come to oversold zone. The MACD also has crossed over. This is first crossover candle trading with divergence. This is coming after a long streak of bullishness. See, previously this was the crossover, strong bearishness was seen. Possibly it can try to pull the prices little lower from here. This is one indication where we are looking forward to near-term bearishness in gold. RSI looking downwards, and if you look at the daily chart, same thing on the daily chart, the prices diverge here, converge till 20 period. Now 20 and 50 period are on the verge of a crossover at 1985. Very good resistance. 100 period moving average giving it a very good support. Also, this is the bottom of the Bollinger Bands. Hence, a little retracement before it looks forward to a drop can be expected. And hence, right now it is bearish. Crossing over here will certainly bring more bears. The super trend has turned signal red here, signaled a sell entry here. Remember, this signal is coming after a long time. After 2 to 3 months, it is turned into red, and hence more bearishness may prevail. Stochastic looking down, MACD divergent and bearish, and see it has come to a level where there could be a little retracement on the upside. As I said, 1980-85 levels for next couple of days or few days cannot be denied before it looks over to a downward move. RSI also at bottom, but it does not mean that it has come to pure bottom. Also, see this. If it breaks, this could bring a little more volatility, little more bearishness here, and hence now we have seen the charts, we have seen the indicators. Time for me to define the trading strategy and levels so that you can profit next week. But before we proceed, if you want to learn this art of trading profitably, you should join my mentorship batch. The 22nd batch starts on 5th of June. Only limited seats are available. Reserve your seats now itself. Reach out to me for more details. My Telegram and email IDs are mentioned in the channel and video description. Remember, equip yourself with the right tools, techniques and strategies so that you can become a confident trader, take a right entry at right time and take a right exit. Also, you can join our signals channel where trading as per the signals definitely will benefit. Reach out to me for more details. My Telegram and email IDs are mentioned in the channel and video description. Now, possible retracement is expected, and hence to benefit the most out of the retracement levels, you can buy here at 1951. Expect 1956 and then 1964. Now 1964, 1970, 1980 and 1985. Remember, this is still in the retracement zone, and this could possibly retrace till here. Some of the key levels you should watch out for: 1970, 80 and 85. Only and only if it comes out of this zone, if it trades above this, then more bullishness till now. See, more nearby resistances, it means a lot. You should book your profits here and keep at least stop loss at cost. Keep shifting stop loss to here, so that in case of a reversal, your trade closes in profit. See, when the retracement, this is a retracement level, which means there is a trend which is a downward side. Retracement means is try to pull back a little upside before it looks over to a downward side, and hence when the retracement trades are there, the resistances are very nearby. You should always keep shifting your stop losses to the resistances and keep booking profits. Beyond 1985, yes, if it stays 1993, 2000 levels can be seen again. Remember, if it stays above 1985, more bullishness may prevail. 2020 can also be expected. Chances are less that now it will go till towards 2020, but these are markets. Anything and everything is possible. It is beyond you and me. Just stick to the levels. On the downside, where to sell? I will recommend you to sell here at 1939 levels. See, a notch below the resistance at 1940, but below this also 1935, 1930. If these two levels are taken, you can stay short in gold here below 1930. Just stay short. We are looking forward to 1915, 1900 and then a plunge till towards 1870 levels in a very rapid manner, in a very faster manner. This will execute possibly for next 2 to 3 days. There is a chance of a retracement. Do not consider this as bearish. You can see it retracing till towards 1870 80 levels, consolidating there, and then a downward pull. Thus, take your trades accordingly. Trade with a stop loss, trade with a trailing stop loss. Do not forget to like, share, subscribe, and comment. Join my mentorship batch and join my signal channel. Reach out to me for any of your trading or training queries. My Telegram and email IDs are mentioned in the channel and video description. Thank you very much. Have a great profitable trading week ahead. Thank you.